We have breaking financial news overnight about another bank failure. Regulators have seized First Republic Bank and chosen J.P. Morgan Chase to buy most of its assets. First Republic has been sinking for weeks ever since Silicon Valley Bank and Signature Bank failed in March. Its stock price had plunged from $120 a share to about $3.50. CBS News business analyst Jill Schlesinger is here to break it all down. It's the first of the month and the first day of the week. I don't know if that's a good sign, but let's jump right into it. So for people who have an account at First Republic, what do they do now?
Very easy, nothing. Your bank branches are going to open today. 84 branches from First Republic are going to open. All the deposits are going to be safe. So remember, in Silicon Valley Bank, there was a real question because there wasn't a purchaser for Silicon Valley Bank. So the government had to come in and say, wait, all the depositors are safe, and we are insuring everyone. They don't have to do it this time because J.P. Morgan Chase is coming in, buying all the deposits, buying most of the assets. And that really does mean that all the consumers who have accounts at First Republic can actually relax because you're just going to walk into your branch if you need some help. J.P. Morgan is going to make those transactions. Everything's kind of cool. One other thing I should just mention is that when we had the problems at First Republic, there were 11 big banks that injected money, $30 billion total into the bank to kind of help the depository base rise. They're also going to be made whole from this deal.
So the Federal Reserve released a report on what happened at Silicon Valley Bank. What do we learn from that?
I think this was a stunning report. I know it happened Friday, so a lot of people focused on playoff weekend. But what's really important in this report is that the Fed is saying we messed up. And they said, yes, there was bad management at Silicon Valley Bank, but as the bank grew in complexity, we kind of took our eye off the ball. Because we saw problems, we didn't escalate them quickly enough, and that was a problem. And reality, bottom line, they said, when we saw a watering down of regulations in 2018 across the banking sector, that the tone at the top of the Federal Reserve meant that people weren't paying as much attention. This is incredibly important. It's like a mea culpa that we don't usually see among banking regulators.
You're the best, Joe. Appreciate you.